Hey everyone, we had some huge news for Palo Alto stock investors and the cybersecurity industry at large, as a major change in investment strategy in business strategy is being implemented by Palo Alto Networks. So in this video, I'm going to take a deeper dive into Palo Alto Networks from the CFO perspective and try and understand how this shift in strategy will impact the company going forward. So let's dig into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the CFO providing some reference to what happened for the previous quarter in terms of revenue, which grew 1.98 billion. That was up 19%. So there were some puts and takes during the quarter related to billings. And if you're not aware yet, billings was the major reason why Palo Alto Network stock price fell following its earnings announcement. Its guidance for billings in the next quarter of the low single digits was what disappointed Wall Street investors. And so that's what we're trying to find out more about here in this video, is more explanation as to what's going on inside the business. So the CFO saying they saw some weakness in U.S. federal government business, and that was a meaningful headwind to our billings in the second quarter. That was a meaningful headwind. So that was one area of billings headwinds. Another reason is they continue to see customers closely watching cash outlays around deals. And I've been discussing a little bit about this when I talk about my AI videos and AI companies. Businesses are really accelerating investments in artificial intelligence, and that money's got to come from somewhere, right? So they're looking around, and cybersecurity is an area where businesses really feeling fatigued with. They keep spending more and more money on cybersecurity, and they keep getting breaches, they keep getting hacked, and all of these other issues. And so they're saying to themselves, why do we continue spending more money on cybersecurity when we're going to keep getting hacked and we're going to continue getting breaches? So this is one area perhaps where management teams are saying, well, let's reduce some of our spending on cybersecurity and let's use some of that investment on artificial intelligence. And we're seeing evidence of that here with Palo Alto Networks. So the CFO saying that remaining performance obligation was 10.8 billion and the current portion of that is 5.2 billion. These are contracts the company has signed. Let's say it's a 12-month contract at 100 million per month. That's a 1.2 billion dollar contract. 100 million will be revenue this month. 1.1 billion will be a remaining performance obligation. As Palo Alto Networks services that obligation, it'll turn into revenue. So remaining performance obligation gives you an idea of what revenue is going to be like over the next 6, 12, 18, and 24 months. Investors want to see this number be large because that suggests that the company has strong backlog in front of it, strong revenue ahead of it, and it's not going to be impacted in the near term by any meaningful changes. And we saw this in the current quarter with the slowdown in expected billings. That's not expected to decrease Palo Alto Networks revenue just yet because of this backlog. It's still going to be serving backlog from before. And so even though it's not going to be signing a lot of new customers in the next quarter, it's still got strong backlog. Notably, the company reported GAAP net income of 1.75 billion. That was boosted from a one-time tax benefit of 1.5 billion. So don't expect Palo Alto Networks to consistently deliver net income of this magnitude. This was unrealistically large. The company saying it was just a one-time item. Don't think this is going to be a recurring theme here just yet. So total contract duration was down slightly year over year. And here we get into more of the details that we're looking for, the juicy stuff. Is the CFO saying he wants to spend more time talking about the accelerated platformization and consolidation strategy. This is Palo Alto's new strategy where it's aiming to take more customers away from rivals. It wants to get more customers onto more of its services, right? Palo Alto Networks is a full service cybersecurity firm. It has more than one solution. It has almost everything you could need if you're looking for cybersecurity. You don't have to go around looking for one type of cybersecurity because there's many types of cybersecurity. You could just go to Palo Alto Networks and have them give you all of your needs. But companies right now have several vendors, and Palo Alto wants to change that. They want to be the one vendor that clients go to. So part of their strategy to do this, or part of the reason they're doing this, the benefits is it's going to result in faster capture of the customer estate and larger platform commitment to higher renewal and expansion rates and faster adoption of their new innovations. And that's true. If you've got a customer who's got 4 or 5 of your services, it's more likely that customer is going to renew with you. And when they renew, they're renewing 4 or 5 services. Because once they're with you for those 5 services, if they wanted to switch out and go find 5 other vendors, think of the time it'll take to go and look for 5 other vendors to switch out of what you're currently in, and the time. And that's the real reason why Palo Alto Networks is doing this. They're counting on the cost of switching. That's a significant competitive force industry-wide, not just for cybersecurity, but for many companies, right? Apple is famous for this. They get you into the Apple ecosystem. And once you've got an iPhone and you've got Apple Music and all these other products, when it comes time to upgrade, you're likely going to stick with Apple because the cost of switching to another provider is too large for a person. Too much time, too much inconvenience, so they just stick with Apple. That's what Palo Alto Networks is counting on with this strategy. So to implement, they're effectively going to provide customers a period of the contract for free as part of their commitment. They expect to see a period of 12 to 18 months of pressure on their top line growth, notably billings. So that's where it's going to hit the company, is they're going to offer this service for free. And if they're offering it for free, that means they're not generating sales, they're not generating billings, they're not generating contracts. And so that's going to hurt them on the top line initially as they offer that free service to customers. Let's say they were offering this to 100 customers, right? Out of those 100 customers, maybe 10 or 15 or 20 or some number were going to sign up with Palo Alto Networks anyways. So you're cannibalizing your business, part of your business, by offering this free service to other businesses that were maybe considering joining Palo Alto Networks anyway. So that's where the headwind's going to be in offering this free trial to so many businesses to get them to use your product at first before they pay you when they renew. So along with this bad news that Palo Alto Networks gave investors, they also told investors that they're now targeting a long-term goal of 15 billion in annual recurring revenue by 2030. So initially there's going to be headwinds, but what Palo Alto is saying is if you look longer term, it's going to be better for the business because it's going to lead to more customer acquisition, and those customers are going to renew, and those renewals are going to come at larger spending, larger average spend per customer. And so longer term, that's going to be a benefit. So this is Palo Alto's way of getting investors to focus a little bit more on the long term and not so much on the near term, because the near term is going to be choppy. And so what the CFO says is, as we embark on a strategy that we expect will negatively impact top line in the short term, we have significant confidence that our business scales well and we can continue to see operating leverage from a number of drivers. So they've done their calculations and they feel that the downside of the initial revenue decrease or the revenue growth decrease is more than offset by the longer term benefit of a large percentage of these customers renewing with Palo Alto Networks on a real money deal, not on a free money deal. And management has confidence in that. While I feel confident that management feels confident, what I didn't see much of here discussed is the competitor response to your moves, because you're not operating on your own in the cybersecurity industry. You're operating amongst a group of rivals. And when your rivals see you take a move like this, that's aimed at them, right? This is aimed at taking market share away from rivals. Your rivals are not going to sit back and say, oh, poor us, Palo Alto's coming to take our customers. They're not going to do that. They're going to think of ways to respond, and they're going to think of ways to come back with an even better offer. And so this has the risk of escalating into a price war where Palo Alto Networks might offer a free trial of 6 months or 12 months, and the rival might say, fine, we'll give you 24 months for free. And then what's Palo Alto Networks going to do, right? Are they going to come back with an even greater offer? And so you're seeing a lot of this play out in the EV industry, right? Late 2022, they started price cutting. And once Tesla started cutting prices, competitors started cutting prices. Tesla cut prices more, competitors cut prices more, and it's continued into 2024. Just a few days ago, Tesla announced even more price cuts, and we're in 2024. So it's a year and a half now that price war has continued, and that's hurt profitability industry-wide, and you can see investors getting hurt. EV stocks, for the most part, are down significantly since late 2022. This has the risk of escalating into a price war, and this is what I'm paying close attention to, and I've been mentioning with Palo Alto videos that I've done in recent days. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.